Hello traders, Gary Wagner here, just around 11:15 in Honolulu, 4:15 in New York. It is Wednesday, November 23rd, 2016, and this is the Daily Report for Gold and Silver. Massive sell-off in the precious metals markets resulting in very substantial drawdowns in both gold and silver, with gold plunging below 1,200, closing off about $22 on the day at 11.89 even. The low today is 11.8120 and the high 12.1470. So quite a move in the market, a drawdown of about almost 2% on the day. Now silver was lower, trading off about 1.5% on the day to close at 1637.5, with a low today of 1615 and a high of 1672. Of course, when we look at spot prices, 11.89, same prices we talked about yesterday. We do have futures and spot coming into alignment, and then silver spot prices at 1637. Now, one of the predominant reasons that we saw a gold sell off dramatically today was a strong U.S. dollar. As you can see now, U.S. dollar closing up 0.6%, a 63-point rise, 101.67. However, in the big picture, that doesn't fully account for the kind of move that we saw. In other words, this strengthening U.S. dollar did take away about $8 worth of value per ounce in gold. But the remainder, that $23 minus that, so the remainder of that is directly accountable with selling in the market. So the trends that we have seen develop just following the election of Donald Trump about 2 weeks ago not only seem to continue to be prevalent in the market, but actually those trends continue to strengthen, with equities vis-a-vis the Dow Jones Industrial Average going to a new record high today. And as we're looking at right now, the dollar continuing to rage to the upside. Let's take a look at our first chart and see how that affects our current forecast. So traders, absolutely no doubt, we witnessed a pretty strong decline in gold prices today, plunging almost 2% lower, definitely well below $1,200 per ounce, currently trading December futures at around 11.89. As you know, there have been a couple of things that we have been extremely focused upon since the election results came in a couple of weeks ago with Donald Trump, and we witnessed the beginning of the decline as gold, which was trading above 1,300, broke below 1,300. And we first took a look at any kind of seasonal tendencies, and what we uncovered was that typically as we move in towards the end of a year, as we do right here in 2014, 2015, it wasn't an incline, but then continued on its way up. And then, of course, last year, meaning the beginning of this year, the end of last year, we saw the market bottom out towards the end of last year, December, beginning of this year in January. And based upon that, we thought that there was a logical rationale in terms of a seasonal force to see some downside pressure in the precious metals markets. We certainly have seen that. Now, that brings us up to our current forecast, and for that, we need to really look at a daily chart. Let's go ahead and pull that up. And so, traders, I've done just that. I will convert this into a weekly in a second, but I first want to look at this as a daily chart and look at it as a bar chart. Reason for pulling up a bar chart is it is the highs and lows that we really want to focus upon. For example, the top of this market that we had this year, obviously at around 1380, that occurred, April into June, and a little bit into July of this year. And the lows that we saw this year, of course, occurred at the end of 2015, beginning of this year in January, when the market hit that low of about 1050. Now, based upon these highs and lows, we have put in a critical fib retracement in which we have plotted basically two areas. First area, 50%. Second area, a 61% retracement. Now, we spoke about the fact that this was a logical point to look for potential support in the market at around 1209. However, if you recall over the last couple of days, certainly last week, we talked about the fact that it is not one of the stronger points we would look at in terms of a natural fib area, and 61% in terms of a deep correction is what's most probable. And so our earmark and target has been about 1170 for gold. Gold's now at 1188. So it's quite obvious that this market has continued to decline. I'm not convinced that we are at a point which we should start looking for support, because really we do have a technical top, but the top comes in higher than this area. And so we're not really in a technical price point that gives us any historical data that would say look for support in this area. Also, I believe that the factors that have moved this market lower are still absolutely prevalent in market sentiment. Which lastly brings us to the big picture, back to our weekly chart with our current market forecast. And I still believe that we have some more room to the downside. In other words, we had one substantial rally which occurred from the beginning of this year, as I said, till about midpoint through the year, took us to about 1380. We've plotted this 61% retracement. Typically, a B wave will move anywhere between 50% and 75%, which would take us, I believe, to around the 1120 area. We can plot that after the Thanksgiving holiday, of course. But I believe that the market sentiment that we have seen should and could take precious metals prices lower. They could remain stagnant or under pressure, at least as we go into December and the Christmas holiday. We could easily see this market bottom somewhere in December, somewhere in January, as we have in past years. And that would really signal the fact that we have concluded this counter B wave here, which was our down wave, and move into some sort of a C. A C wave would take us above the highs that we achieved in 2016. So I do believe that 2017 can hold higher pricing for gold, but first we have to weather and complete this current corrective period. So traders, lastly, I do want to take a look at silver. Silver plunging 1.67% lower on the day, a 28-cent drawdown. Now, what's interesting about silver on a technical basis is we have basically the same fib retracement from the low silver hit this year to the high that it hit. It was really a 61% retracement that silver fell to when gold fell to a 50% retracement. And now that gold is broken and is close to that 61%, although it's trading above, we can see that clearly on this weekly silver chart that silver prices have broken below a 61% retracement. The next level is a 78% retracement, and that comes in at around 1530. So we could see a further decline in silver based upon these technicals. Traders, Thanksgiving is a holiday which will occur tomorrow, and to all of our subscribers, whether you're in the mainland or anywhere globally on this planet, I do want to wish you a happy holiday, and most importantly, please, let's all reflect and be thankful for what we do have. As we look at the performance of this year, we've done exquisitely well. We're still well above a 300% profitability in terms of our trade recommendations. We have weathered these downside moves. I have, of course, been inactive. I'm not a big short player in the market, although many of my long-term subscribers short the market whenever we're flat, and that seems to work out pretty well for them. But we've done really well this year. We have a lot to be thankful for, and especially with the uncertainty next year, let's relish in the fact that we had a really, really decent year. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you after the Thanksgiving holiday for another update and review. Have a great holiday. Bye-bye.